Good day, everybody. This is Matador from freetradingvideos.com. It's the 18th of March, about 8:45 a.m. Eastern Standard Time, and again looking at the S&P 500 ETF. Bit of a down gap this morning after a great run up into the 117.30 mark. If you scrunch this up, a little 3-minute chart here, you can see where we came from yesterday. Beautiful symmetrical triangle basing on high, with the highs being roughly 117.50. Good size sell-off fairly quickly. That'll be some good resistance on the way back up, as well as this. We fought through that post-market, but this series of lower swing highs and lower swing lows through here, a little easier to see on a 15-minute chart, but not too bad of a sell-off right to the rising 50 MA. Good level of support at 116.80. There's good resistance pre-market, broke, became support, support, and that's kind of where we were hitting again here pre-market. Now we're running up to fill the post-market gap. So 117.18, not too bad. Nice little run up. And again, we'll have to see how we open, but this could be a completely flat open if we use this price level at the open. So with all that being said, I want to talk just briefly about what happened with the market internals yesterday after that nice run-up. The run-up itself occurred with the VIX being low, very nicely low. In fact, trying to test through the 1660 area. Even went down to 1650, made a double bottom, and then started running higher. That wasn't an absolute disaster. In fact, it wasn't a complete gap fill, even though the VIX dropped from the morning. So not the best bearish environment to go short in, especially after the markets have been so strong. But again, I've been saying for a few days in a row, back to the S&P 500, looking at a daily chart, I mean, that's a very, very short consolidation at resistance. Nice breakout past that, now using that as support. The 60-minute chart shows even nicer. You know, I could scrunch this all up. It's the same exact thing as a daily chart, just more defined now. Breakout, support, huge run up again. You know, even this test up into 117.50, unfilled gap still remains support. So there's a lot of support now in here, even though it has gone higher dramatically. What I want to do again is just simply wait to see where we consolidate or put in a higher swing low, because it's not the easiest environment to go long in. Just to say that over and over. So on a weekly chart, again, a little bit bigger time frame, of course, past the 100 MA, past this 116.56 area very nicely, but just still a little blip on the matrix on a monthly chart. Let me go back to a weekly chart here. There we go. So we're past the swing high, past this 116.56 area, but barely. And again, I want to watch and see how this reacts and whether we consolidate, especially with the declining 200 MA overhead and the 120 mark coming up. Those are a good distance away if you're talking about the spiders on a daily chart, but only a few points. So again, grain of salt, but looking for support to hold, and if not, I'm going to look for those swing lows that get put in or consolidation to mark the sentiment. And as far as keeping up with it, we'll start doing that around noon today. And I'll be with you to burn a new video to see how things are shaping up. And I hope you have a great trading day, everybody. Talk to you soon.